Welcome back to my channel, ladies and gentlemen. I am so delighted, I am so happy to welcome you once again to my channel. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Austino FS, where I talk about forex trading and all the things that you need to do to become profitable in the forex market. In today's video, we are going to be talking about the inverse head and shoulder pattern. The inverse head and shoulder pattern is a chart pattern that so many forex traders use to make money in the forex market. It is a reversal chart pattern from a downtrend to an uptrend. So if you understand chart pattern, you will know that the inverse head and shoulder pattern has over 85% win rate once you know how to identify it in a chart, right? So you know that a price chart is made up of three components: the uptrend, the downtrend, and the range, right? So how do you identify an uptrend when the price is making higher high and higher low? And how do you identify a downtrend when the price is making lower high and lower low? Then how do you identify a ranging market when the price is making highs and low consecutively? You know that the price is in a range. So now, with the help of the inverse head and shoulder pattern, you will be able to know when a downtrend is about to end and a new uptrend is about to begin. So the inverse head and shoulder pattern works during a downtrend. It is the opposite of the head and shoulder pattern. The head and shoulder pattern works during an uptrend, while an inverse head and shoulder pattern works during a downtrend. So in a downtrend, when you discover an inverse head and shoulder pattern, know fully well that the downtrend is about to end and a new uptrend is about to begin. So you should be preparing to ride the new uptrend. So the inverse head and shoulder pattern is one of the best technical analysis in price action once you know how to identify it. So in this video, I'm going to walk you through a practical step on how you can identify an inverse head and shoulder pattern on a chart, so that you will know when a downtrend has exhausted and when a new uptrend is about to begin. So let me give you an example on how an inverse head and shoulder pattern looks like, so that when you identify it, you will know what to do. So this is how an inverse head and shoulder pattern looks like, right? This is how an inverse head and shoulder pattern looks like, right? This is how it looks like. So once you identify something like this on a chart, you know that this is an inverse head and shoulder pattern. Now, let me give you a clean practical example for you to understand what I'm talking about. So now let's assume that the price is in a downtrend. Like when the price is in a downtrend, the price will be making lower high and lower low, right? So let's say lower low, right? Lower high. Price is making lower low and lower high. You simply know the price is in a downtrend. So this is just a practical example of how to identify the inverse head and shoulder pattern, right? So you can clearly see that the price is making lower high and lower low, telling you that the price is clearly in a downtrend, right? So when you look clearly, you see that the price is in a downtrend because it's making lower high and lower low, lower high and lower low, lower high and lower low. The price is in a downtrend, right? This confirms that the market is in a downtrend. So if you want to know whether if the price is going to reverse to an uptrend, if you want to know whether if the downtrend is becoming exhausted and the buyers are about to push the price up, that is when the inverse head and shoulder pattern comes in. So once you identify an inverse head and shoulder pattern, you know that the buyers are stepping in and very soon they are going to push the price up, which tells you that the downtrend is about to end and a new uptrend is about to begin. So to identify an inverse head and shoulder pattern, you see something like this, right? Price now makes a little lower high, then makes another lower low. This time around, this one engulfs the previous low, so the price makes a lower low, but this time around could not come to this lower low again, right? Instead, it makes a little lower low, and if you check, you see that it's the same level with this one, right? So once you identify it, and the price now makes another pullback, right? Are you seeing it now? So now, once you identify something like this on a chart, you know that this is clearly an inverse head and shoulder pattern. It tells you that the sellers are tired of pushing the price down and the buyers have stepped in. So you can clearly see that the price was making lower high and lower low, lower high and lower low, lower high and lower low, till the price got to the last point of defense. This is the last point of defense. This is the level where the price got to. That is the lowest low, where the price could not break any lower, right? It now makes a pullback, right, to the same level. That is, this becomes a resistance level, and then makes a lower low, but this time around couldn't go past these lows, right, and then continue up. So once you identify this, what you do is simply draw a neckline, right? You draw a neckline using a horizontal line. You simply draw a neckline to connect the previous highs, right? You draw a neckline, right? Now what you're waiting is a crossover. So once the price has, once the price has gotten to this point and unable to reach this head, right, and the price reverse, you now draw a neckline. So in the process of that, you now know that head and shoulder pattern has already been formed, right? So this is the head, this is the left shoulder, and this is the right shoulder, right? So you can clearly see that inverse head and shoulder pattern has already been formed on the chart. So like I said, this is the left shoulder, this is the right shoulder, and this is the head, right? So what you do is you simply use your horizontal line to map the highs, right? This is the highs. We call it the neckline. Use the horizontal line to map your neckline. That neckline now becomes your resistance level. So you are now waiting for price to break above the neckline for you to take action. So once price breaks above the neckline, it means the new uptrend has begun. The buyers have stepped in fully and they are going to push the price up, right? So what some traders normally do is that once they discover that the inverse head and shoulder pattern has been formed and the price couldn't break through this neckline, they try the first time, second time, what they will do is they will place a pending buy order somewhere above the neckline, and maybe their stop loss will be at the previous low. Somewhere here will be their stop loss. So what I'm doing this is, in case if the price breaks above the neckline, it will trigger their buy entry and they will be able to ride the trend. While some traders will prefer to wait for the price to break above the neckline and then comes back to retest the neckline before they place their buy trade. Something like this. They wait for the price to break above the neckline like this, then they will sit patient and then wait for price to make a pullback to the neckline, right? Once the price makes a pullback to the neckline, they will now place their buy order and the price will now reverse from the neckline and move higher. Do you see it now? So some traders will prefer to wait for the price to break above the neckline, makes a pullback to the neckline, right? Know that the neckline is acting as a resistance level, right? And what happens once a resistance level is broken? That resistance level tends to become a support level. So for the fact that this resistance level has been broken, it tends to become a support level. So some traders will wait for it to test the neckline, for them to confirm that the trend is actually going to proceed, for them to confirm that the buyers have actually stepped into the game. So once the price comes back and retests the neckline, they will now place their buy order or their buy trade, and then the price will continue heading higher. So with the help of the inverse head and shoulder pattern, you can clearly see how a reversal pattern happens, right? Because we call this a break of structure, a break of market structure, because formerly the price was making lower high and lower low, 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 and then suddenly the price shifted from making lower high and lower low, started making higher high and higher low. You can clearly see it now, higher high and higher low, higher high and higher low, higher high, right? So this is how you clearly identify a reversal pattern, right? So like I said, this pattern is so powerful that it generates over 85% win rate. Over 85% win rate once you know how to identify it. So clearly you can see that formerly the price was in a downtrend, then got to this point, formed the inverse head and shoulder pattern, and then the price now reversed and started a new uptrend. So this is clearly an uptrend, and this is a downtrend, and this is the inverse head and shoulder pattern, right? So this is a downtrend, this is the inverse head and shoulder pattern, this is the uptrend. So try as much as possible to understand how this inverse head and shoulder pattern looks like, so that you can be able to identify it on a chart, because like I say, it has over 85% win rate once you identify it in a downtrend. Once you identify an inverse head and shoulder pattern in a downtrend, know fully well that it has over 85% win rate, right? The probability of the price reversing is very high. So the best thing is for you to be able to identify it right in a chart. So the another thing you need to understand is that the higher the time frame, the more reliable the signal. If you identify the inverse head and shoulder pattern in a 5-minute time frame, know fully well that the signal might not be reliable compared to 1 hour time frame, right? If you identify the inverse head and shoulder pattern in a 1 hour time frame, it is more reliable than when it is being identified in a 5-minute time frame. So take note of the time frame, right? Because the higher the time frame, the more reliable the signal. So I will advise you to always look for the inverse head and shoulder pattern at a 1 hour time frame, right? So once you identify it at a 1 hour time frame, you will know that it's going to play well, right? But if you identify it in a 5-minute time frame, it could be a noise, right? It could be a noise because the time frame is so small that you don't know whether if truly the price is going to respect the inverse head and shoulder pattern. So the time frame also matters in this strategy. So the better you use the higher time frame, the better for you, right? So let me give you another example. This live example of how an inverse head and shoulder pattern looks like, right? Now look clearly on this chart. You can clearly see how an inverse head and shoulder pattern looks like. Now you can clearly see that the price was formerly in a downtrend, right? Formerly in the downtrend, making a lower high and lower low, right? So when the price got to this point, the price now reversed, made a retracement to the previous high, right? To the previous high, and then when it got there, it got rejected, then make a down move. But this time around, the price could not get to the previous high, right? Forming the head and shoulder pattern. That is the inverse head and shoulder pattern, right? So the price could not get to the previous low and rather reverse from this previous low. So if you check, you see that this low and this low are equal, right? But the price could not get to this low. So now this low becomes the head, this low becomes the left shoulder, and this low becomes the right shoulder, right? And the price now reverse from the right shoulder and start heading up. So once the price start heading up, you can simply use your horizontal line to draw a neckline. So what you do, you connect the two highs, this high and this high, you connect it together to form what? A neckline. So the neckline now acts as a resistance level. So what you are doing now is you are waiting for price to break above the neckline for you to confirm that the trend have changed direction from a downtrend to an uptrend. So if the price eventually breaks above the neckline, you know fully well that the trend have changed direction, right? You cannot trade in the direction of the trend. Let me give you another example for you to understand what I'm talking about. Now look clearly, you see another example here. Formerly the price was clearly in a downtrend. You can clearly see the price in a downtrend, right? Got to these lows, then made a pullback to the resistance level, right? Then got to this resistance level, then went down again, broke below this previous low, then went to this low, right? When the price got to this low, the price now reversed and went up again to the same resistance level, right? and then reverse from there. But this time around, the price could not get to this previous low. Rather, the price got to this low and then reverse, right? So as the price got to this low and then reverse, you simply know that this is clearly an inverse head and shoulder pattern, right? Because it has formed the head, the left shoulder and the right shoulder, right? So this place now becomes an area of value. You simply use your horizontal line to map this level. This now becomes a neckline, or you can call it the resistance level. So this is the level that so many traders will be looking at. You are waiting for the price to break above this level for you to take action, right? So if the price eventually breaks above this neckline, you simply place your buy trade and your stop loss should be below the neckline. Or you can simply wait for the price to break above it and make a retracement to the neckline before the uptrend continues, right? So some traders might wait for the sake of fake out, because sometimes the price can break above it and then comes back to retest the neckline, right? So if you place a buy trade when the price has broken above the neckline, when the price makes a retracement, it might trigger your stop loss depending the distance of your stop loss. So for you to be at the safer side, it is wise for you to wait for the price to make a pullback to the neckline, retest the neckline for you to place your buy trade, right? So like I said, when the price is in a downtrend, right, you watch the price action. When the price is in a downtrend, goes to this point, right, and then makes a pullback, it now forms a low here, makes a pullback, right, and then reverse from here. So the point that the price reversed from becomes the resistance level, right? So the price now went down again, breaks below this previous low, went lower again, right? That is what we call the lower low. Went lower again, so get to this point, the lowest low, and then reverse from there. Went up again to test the previous high, that is the resistance level, and then reverse from there. They went down again, but this time around the price could not get to this low, right? Rather, the price reversed from this low and then continue heading up, right? So once you identify this, you simply know that this is clearly an inverse head and shoulder pattern. So you use a horizontal line to map the highs. You connect the two highs together, connect it with a horizontal line, and this becomes your neckline. So you now watch for price to break above it. So once price break above it, you know that the trend have changed direction. The uptrend has begun because the sellers could not push the price lower. So the buyer step in and then we're able to push the price higher. So like I said, you can simply place a pending buy order above the neckline and your stop loss below the neckline, or you can wait for price to break above the neckline and make a retracement to the neckline. So once the price tests the neckline, you cannot place your buy trade and your stop loss will be below the neckline, right? So your take profit should be 1 to 3 risk reward, right? Or if you want to ride the trend, you can simply use a moving average, the 20 exponential moving average, to ride the trend. So when the price crosses below the 20 exponential moving average, you simply take your trade, or you can have a fixed target profit of either 1 to 2 or 1 to 3 risk reward ratio. I hope you understood everything in this video. So that is all I have for you on the inverse head and shoulder pattern. My advice to you guys is to go and backtest this strategy very well. Make sure you backtest it on your demo account before you test it on your real account. Backtest it very well, and if it works out for you very well, then you can use it in your real account. Also, for those of you that are interested in my premium video where I share my personal strategy on how I trade the forex market, my WhatsApp number is on the description of this video. You can chat me up to get a copy of the premium video. It is a 2-hour video where I detailed my personal trading analysis, how I trade the forex market, right? So that is my personal trading strategy. If you want to get it, simply chat me on WhatsApp. My WhatsApp number is on the description of this video, and like I said, the premium video is not free. It goes for $100 only, and once you get a premium video, you automatically become my mentee and I become your mentor, which means you're gonna ask me questions about forex trading anytime, any day, and I'll be there to guide you. So make sure, endeavor to get a copy of this premium video, right? So ladies and gentlemen, that is all I have for you in today's video. If you love this video, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this. And also don't forget to turn on the notification icon to be notified whenever I update new content. I will see you again in my next update. Bye.